As traders, we are constantly facing decision to understand where the market is going to go in the next couple of minutes. But since we have no idea where the market is going to move, only thing we can do is we can use guidelines in form of price action rules that will help us stay on the right side of the market. And we can see today that the most recent structure before the US stock market open is a bullish move to the upside. So first we need to identify the channel. Why? Because we want to follow the trendline rule. We can see how nice price is fitting inside the channel. There was a break and we expect, according to trendline rule, for price to create new extreme. And here we had to make the first decision today, because instead of price creating a new extreme, we have a bearish move down and pushing below exponential moving average. So right now I'm asking myself a question. Are we going to create a new extreme, or are we pushing back below EMA, and this downtrend is being valid? To help me decide which of these two options is valid, I'm going to take a look what is the bigger pattern. Since this is a very tight channel, I expect that there is going to be a break and a new extreme form right shortly after such a tight and steep channel. The fact that we are already pushing quite substantially down like this is telling me that this downtrend is stronger, and more importantly, the bigger pattern is trading range. We can see that there's a move down, move up, move down, move up. EMA is being flat, it's getting in the middle of these bars. This is clearly a trading range structure. So the bigger pattern for the day is trading range, and the bigger pattern takes precedence. So once I see price pushing below EMA like this, and I can see that off the highs, it's offering me a nice geometrical formation, I'm forgetting about the bullish trend to the upside, and I expect for price to continue back below EMA and potentially reach all the way down to this support, because this is now a failed breakout and most breakouts of trading ranges will fail. As the price is pushing lower right here, I'm thinking bearish. The bias is bearish. And if I want to take high probability setup, the high probability setup is going to be a second entry short at the key entry point, or failed second entry long. Market likes to move in pairs of twos, but we can see that the market is stacking a little bit. And once the price is approaching exponential moving average, this is going to tell us what's going to happen, because we can push higher. If we push higher, I scratch the idea and I'm just going to be patient. If there is a rejection at the EMA, this is already indicating a good bearish momentum. We can see that we have a first entry short. We triggered higher, it's in reverse down, and this is a good bearish momentum. But there is no trigger below this bearish bar, but the first entry triggered below this bar. So we have a first entry short triggered, price pull back a little bit, and there is a second entry short. Now this is a two-legged pullback, but we can see we have 4 bars that are stacked right next to each other, and the exponential moving average is completely in the middle of these bars. This second entry short was extremely tempting to take, but given the fact that EMA is so completely dead on in the middle of these bars, I expected for price to give me a little bit of a breakout pullback to go short. This entry is not the bad entry by any means, because the downtrend needs a new low. Notice that we break the downtrend and we expect for price to create new low according to trendline rules. So this is a second entry short. It is slightly aggressive. I'm going to mark it as a slightly aggressive entry because we are quite stacked. The safer entry is to wait for price to break out of this tiny congestion, pull back, and give you additional way to enter a congestion and a lower high setup. This was my first trade for the day. Notice that price still tested the exponential moving average. This is the key entry point. We triggered higher, and in 1 instant second, we completely reversed down. Every single time you see such a strong momentum, this alone is already great indication that you are on the right side of the market, because the bar moved really quick. So when I was watching this, I really liked the lower high on its own, but once it ticked higher and instantly reversed down in a split of a second, that will tell you that a lot of people probably trap going long directly below EMA. And this is following the price action rule. We need for price to create new low. It's getting a little bit close to these lows, but given the fact how strong and quickly it reversed down, and you're still quite close to the EMA, and you're still quite close to the second entry short. Notice how we haven't moved too far down from the second entry short. So this is a great entry, high probability setup. Then you have a new high form right here. We reset the count after 2-legged pullback, after significant move in the market, and we have a new high, first entry long, pullback, second entry long. Any second entry long in the bearish structure, once we are coming from the highs all the way down to the lows, we are betting that it's going to be a trap. But this second entry short failure happened below a horrible bar. I don't want to go short below this bar right here, and you already have a new low. When I'm watching this, I already have a new low. So even though there's a chance that we may eventually push lower, because a lot of times you get 2 legs to a new extreme, not just one, and the fact that it is at the lows, traders are probably picking bottom. I'm not favoring this trade as a high probability setup. Personally, I think it's better to wait. You want to go short high at these pullbacks. Once you're starting to chase the market a little bit, that's not the best idea. But if this signal bar was much better, much more bearish, I can see the reason why going short here. We can see that we have a 2x down. A new extreme was formed, so we expect correction or straight up reversal. We can see that the price is creating new low, first entry short, pullback, second entry short, but going short below this bar is not great. This is not the great bar, and already 1, 2, 3, 4, 5 bars stacked. Then there was another big bearish bar, and this was really tempting. When I was watching this live, I even extended my channel slightly like this, and I'm about to go short. Here we got a trigger below this bar right here. You guys can see there was no trigger below this bar right here. They make it look really tempted, but the reason here why we don't draw the wider pattern like this is because we are in a trading range, and in trading ranges we want to rely on shortened patterns because we want to follow the break and a new extreme. Take a look: break, new high, break, new low, short-term uptrend, break, no new high, but that happens because we have failed breakout to the upside, break, new low. So this is why we don't want to extend the patterns in trading ranges, because we want to stay on the right side of the market and we want to catch the reversals. But you guys can see there is no tick below this bearish bar, so there is no trigger. The entry hasn't triggered yet. You cannot jump the gun, but by this time 1, 2, 3, 4, 5, 6 bar stack, there is no entry anyway. We can see that the price is pushing higher, so this is already starting to indicate that something is a little bit off here, because if this is a head to trading range, we're going to go from the top all the way down here. This is potentially showing bullish imbalance. We can see that if we're going to draw the midline, I don't draw midlines, I just eyeball them, but I can see that price is not pushing to the downside, and the bottom tier of a channel of this trading range, is completely empty. This is a lot of time how bullish imbalance will start. So as the price is pushing higher, right now I don't see any decent entry. I cannot go long directly into resistance because I can get trapped, and I think it's too early to sell just yet because the bullish imbalance is just forming. So there is no decent high probability setup just yet. We have a new high right here. Price created a first entry long, pullback, second entry long, never triggered. Right here is a hidden second entry long, but hidden second entry long can be good if you are trading it with the direction of a trend. But on the failures, hidden failures are not reliable. If there was a tick higher right here and it needs to reverse it down, this would have been a great failed second entry long because it's right at the EMA, and these ones are the best. Once you're coming off the resistance, failed second entry long right at the EMA, price hasn't moved too far. This is perfect high probability setup, but instead price continue pushing lower. So when I was watching this and I see a legit failed second entry long forming right here, it's already way too down. It worked anyways for a scalp, but since you are not touching the EMA and you already kind of created the move down, almost forming double bottom right here at the midline, I'm going to draw it like here. You know, I really don't like going short right here. You want to sell at the highs, at the corrections, not, you don't want to be chasing at the bottom. But you have to be patient. There are not that many high probability setups on this way down and now in this trading range. So you have to be patient. Price created new low, first entry short, pull back higher, second entry short, failure, but it's not at the EMA. It's right into this trend line. It's right at its highs. If you took this trade, I'm actually going to mark it because I saw a lot of traders took it, and you're following the price action rules. You're just, the timing is a little bit early because you're not touching the EMA. If you draw the, let me move this trend line. If you draw the short-term trend line from the first few swings and you copy it and put it at the top, you're going wrong directly into this trend line. And for that reason, this can be a little bit dangerous. But if you're going to take this trade, you're following the rules, you're having the right idea. Now you have a bullish imbalance confirmed, because if I zoom out, I can clearly see that the midline is holding and we are failing to push to the support. So this is clearly a bullish imbalance. So we are expecting for this breakout to work. When I see this and I see a failed breakout, I'm not fading the breakout. The breakout is expected to work. Okay, so if you took this trade, you got trapped. Unfortunately, you guys can see it needed the additional pullback to the EMA. This is why I like waiting. I don't like going short here. It worked this time, but this time it fails. So this is the perfect example why I like waiting for these reversals close to EMA, because they are much more reliable. 90% chance reliability right here. But these will work 70-80% times as well, yes, but depends how risk adverse you are. Now this is still part of the failed second entry short, because this didn't work and this is still part of the one leg. If we zoom out on the larger pattern, I can see that we have a kind of like a first leg, pullback, second leg, like this. So for that reason, we have a new high, first entry long, second entry long. Not only that, first entry short, second entry short failure. So we have two high probability setups in one. EMA key entry point key is holding price. I expect to go from the midline to this resistance, and I expect for price to create new extreme following the trendline rule. So everything in price action is telling me I'm supposed to go long. You want to be careful going long below bar that is big like this, because the bigger the bar is, it's indicating the strong bearish momentum. If this was regular second entry long, I would wait here. I wouldn't want to go long here because it's scared to go long after such a strong bearish rejection. But since this is a part and continuation of the failure of the failed second entry short, this is a great entry. I tried to go long, my limit didn't get filled. I probably could have hung on here because I put a limit here, it already reached here, and once it was pulling back, I canceled it. I probably would have still, it didn't make the 8 ticks, so I could have gotten filled, but I just eyeballed it and I saw price going higher. So I thought, let me just measure it quickly. I'm quite curious if I could. No, it actually already scalped. Okay, so I eyeballed it correctly. It already scalped, so you want to cancel the order. But then the higher low was formed, and I hesitated. It was my mistake. Since it was so close to these highs, I waited. But this is a great confirmation. This is a high low. This was a purely hesitation on my part, because this is a high low confirmation of a second entry long, and it's actually my favorite setup. EMA keeps holding price. You still expect for price to go higher, and take a look how strong of momentum it generated. Now, when we are watching this, because of the bullish imbalance, I expect for price and this breakout to keep working higher. I have a second entry long, but I cannot go long here because I'm far away from EMA, and there is no double trap, no higher low, nothing. Price just keeps working higher, and I have to draw the trend line. The first measured move is this move right here. I'm just going to copy it, something like that, put it at the top, and I can see that the price pushed to the trading range, we consolidated and broke out of the trading range. And here we're going to talk about what is extremely important, and it's called end of the trend trap. It is very common. We can see that the price created a micro double top, but a lot of times it won't create double top. It will create a regular second entry long. Double tops, micro double tops, and double bottoms reset the count. So we have a first entry long, reset the count, first entry long. But let's say hypothetically there's a first entry long pullback, second entry long. We cannot go long here, and this is typical. Take a look how they trapped everybody going long on the two-legged pullback, and it will completely reverse on them. Why? Because you're going long way too late at the end of the trend. And how do we recognize the end of the trend? Basically, it's the second leg, and the measured move is going to help you to identify. You don't need to have perfect measured move, but once you see first leg, consolidation, and the second leg is already the finishing and the ending move of the trend. So for that reason, it's getting too steep, and this is not where you want to buy. You want to buy at these bottoms. You don't want to be buying right at these highs. Just move up, down, this is where you buy, move up, down, this is where you buy. So you don't want to be buying right at these highs. We had similar example yesterday. Actually, I need to zoom out even a little bit more. We can see that we have a one leg, we traded up into trading range, consolidation, and we have a second leg to the upside. Measured move was made, and we have a new high, first entry long, pullback. There was no second entry long, but it almost triggered. I don't have a trigger on my chart, but you guys can see the same scenario. The second leg, once it's reaching the measured move, is already the finishing touch and of the trend, and the second entry long is just going to be a trap. It's designed in a way it's at the very end of the trend. All right, here I have prepared a similar example that's a little bit different, but we can see strong move up into a trading range, and the second leg up that is breaking out of the trading range is indicating exhaustion, end of a trend, and we have a new high, first entry long, pullback, second entry long. Notice how it's at the EMA, but this is a trap. This is at the very end of the move. This is too steep, and this is where the second leg already formed. Plus, here we have a shortened downtrend, of course, that is working lower. But hopefully you guys understand how to avoid these traps. Once it is a second leg of the trading range, it's an after measured move that will help you. This is where you want to be careful, and you don't want to be going long there. Now, when I'm watching this, we can draw a potentially uptrend like this. And this was really tempting to draw, but these bigger patterns are just not reliable in trading ranges because we've been going sideways for such a long time. If you measure this sideways movement, you can see that this is really not a valid pattern. So you want to play this and focus on trading range. You basically have one leg up, second leg up, and we are way overdone and we're pushing lower. Once we have a new high, first entry long pullback, second entry long, this is where I really wanted to go short here, because when I saw this, I was already preparing my limit order below this bar right here. It was inside of the trend line at the EMA, felt second entry long. You know, a lot of people are going to get trapped, but this bar, look how this bar ended with the bullish stem. So there is no trigger lower, and once this bar form, 1 2 3 4 5 bars stacked, this is where I already canceled the order and hesitated. Once again today I hesitated, and this was not the right thing on my part, because this would have had a major runner, but the context wise this is perfect. Felt second entry long below EMA keeps holding price, then you have a new low, first entry short pullback, second entry short, but the second entry short never form above this low right here. Basically what I'm trying to say, that this already broke this low, so the new count was resetted. So basically you never got the chance to enter this second entry short, but regardless, this felt second entry long was perfect and market came back. Why am I expecting felt second entry long? Because if we take a look at this trading range, this is the breakout area. The price broke here and it never came back and retested it. These breakout areas will get retested a lot of the times. So once I see pushback up and I see already push below EMA, I can either think about that we're going to create new extreme for this uptrend, or we're going to pull back down. And since the trading range is the bigger pattern, I expect for price to test the breakout area, and I'm betting that the price will turn down and take a high probability setup on a felt second entry long. Take a look how only setups you are taking, the high probability setups, are the variation of the two like a pullbacks, and you're trying to stick with the right market context, and you're trying to be on the right side of the move. You have a second entry short, but this is directly into these lows, not close to the EMA, cannot be taken. Market is pushing lower. Once again, not at the EMA, very far. Second entry short fell, but notice how far away it is from everything. Then you get a horrible bearish, horrible bullish bar, no really clean entry. And by this time, take a look at this massive sell-off. I really thought that we're going to get a new extreme form after a break, because we have a new low, you have first entry short, pullback, second entry short, and this was my second trade for the day that I took. This was such a small bar, I decided to take a risk here, but you guys notice how we already stalled a little bit. This was a little bit too wide. We were really supposed to get second entry short right after the first entry, and it's not supposed to be correcting like this. Also, this bar is inside bar of this horrible bar. I like inside bars, but not when the bar is horrible like this. It is at the EMA, and EMA keeps holding price. I really thought we were going to make a new extreme, and I got trapped here, unfortunately. But I really thought we were going to make a new low. I still think it is worth taking a chance to like a pullback to key entry point. First break of a downtrend, you expect new extreme, but the bigger pattern trading range just took precedence again, even though this downtrend was so strong that you would really think we're going to create new low, but the trading range just acted as a failed breakout and price eventually pushed higher. Now I'm going to zoom out a little bit, because then it was really frustrating and really slow and choppy, because I really didn't see that many setups later on. Because when I was watching this, I treated it as a trading range, because I still, after such a strong move down, expected for price to push to a new extreme, or even here push to a new extreme. Once price created first leg up, pullback, second leg up, there was a new high, first entry long, second entry long failure, but I cannot go short above EMA with such a horrible bars. There was a new low, first entry short, second entry short, again no good signal bar. But once it failed to create new extreme and it continued pushing higher, now we were just going sideways. You guys can see how EMA is completely flat in the middle of these bars. You're just swinging up and down, up and down. There was a slow uptrend that was slowly developing like this, but you guys can see that we keep making higher lows, but the highs are static. So this is really not that clear. And there's a new high, first entry long, second entry long. I marked it because it's off the key entry point. It's a second entry long. You close above EMA, but really once the EMA is getting in the middle of these bars like this, and you're just chopping like this, none of these entries are really something I'm excited about to follow the rules. Market broke higher, pull back down, confirm the key entry point, and then you actually have a new high, first entry long, pull back, second entry long. This is actually a much better entry. Because you now confirm the trend line and you broke above. You kind of got away from this sideways movement. You broke above. This key entry point is right now holding again, second entry long. When I was watching this, I was hoping for failed second entry short. This is the new low, First entry short pullback, but there was no second entry short failure. Second entry short failure happened all the way far away from EMA right here, so I don't want to go long here. Then we had an overshoot. We have a second entry long, push higher, another second entry long, push higher. And the reason why I took this trade, this was the last trade for the day I took it for 6 ticks because it was getting late and I wasn't planning on taking this entry. But since the price kept pushing higher, we had 2 second entry longs that were pushing above EMA. This is a high-low confirmation of a second entry long. I really thought it was worth the scalp. Fortunately, it was, but price eventually pushed lower. This was confusing because, you know, this is a very long overshoot. Take a look how many pushes the overshoot took. Overshoot is generally 1, maximum 2 pushes, and then it will break, and not such a delayed move like this. This was a 1, 2, 3, 4 pushes higher before price eventually reversed down, and now it's already way too late. So this was the very difficult afternoon to trade. Easy day during the day, a lot of good clean setups, perfect price action. So I'm going to wrap it up. I'm going to see you guys in the next one.